In this video, we're going to take a quick look at yields and gold. We're going to get a little update on what's happening. It seems right now that gold and yields are correlated. We saw yields get down to their low, their more recent low back in August, and gold was at its high, over $2,000 an ounce. And ever since then, yields have been on the rise and gold has been consolidating downward in a steady motion. And so I thought I'd take some time in this video to update, to kind of think about what's been going on long term, and then try to understand why both yields and gold are at a pretty important near-term spot. So I'm starting here on the 10-year. You can see we're on a monthly chart, and I've got all these various levels. I know it's a little bit messy, but I pulled back to the 1-month chart because I want you to see how this blue trend line that is the brightest, maybe I can even brighten that up a little bit more for us here. But that blue trend line is kind of a prime trend line, has been a top on a number of occasions, even going back to the late 1980s. And we know that bond yields have been coming down for a long time, as bond prices themselves have been increasing for a very long time. The point of this is to show you the long-term nature of these trend lines. We're going back multi-decade in terms of these trend lines. And so what I did was I cloned this line, and it works as support and or resistance in a number of different places. Now I'm going to go down to a weekly view and kind of zoom it in a little bit. You can see a little bit better the touches on the weekly, and you can also see my horizontal resistance and support in the places that it has been. And so then we're going to come into the daily, and here is kind of what I was talking about last year, March of 2020. We came way down in the crisis, spiked, and then came back down as the Federal Reserve intervened. And then at the beginning of August, right here on my chart, you can see this is where we began our slow rise in yields. And at the same time, we saw a simultaneous decline in gold since then. So I'll go to gold in just a little bit. But as I zoom in, I have what I've marked this as a bull flag. I placed this, I'll say maybe back around the 5th of April, and I've adjusted it a tad since then. So at the beginning of this month, I put this flag in here, this flag pattern. If you come down to an 8-hour, you can kind of see how I was able to do that off of just a few touches or a few near touches. But anyway, coming back to the daily chart, it looks like a bull flag, and the question is, where are yields going to go from here? And we did have a point where they popped above the 1675 resistance, and we're even touching the 1767 spot before it has been on a consolidation. And the question is, where are yields going to go from here? Is it possible that yields could come above and resume upward and go towards the 2 range? I think that I still hold that if they go to the 2 range, then the Federal Reserve will have no choice but to intervene again, because the markets, they've shown that they're not willing to allow the markets to go on prolonged downturns. And I just think that given the growth names and how lower yields are better for growth names, that I think that if we get yields up that high, then we'll start to see the equity markets head downwards, and then I think the Federal Reserve will intervene again. That's just my own personal view. But suffice to say, if I come now down to the 8-hour, okay, turn my auto back on, you could see that we're in a number of important places right here, because we are consolidating back down under the horizontal resistance at 1675. And yet it looks like we're popping above a little bit above my little bull flag that I have here. So that could mean something over the next few sessions, but also we are being rejected, at least initially, at that long-term descending trend line. So as you can see, ever since the middle of March to the later end of March, we have popped above, came below, popped above, tried to bounce off and confirm, but then came back below. So this level is really important. We're really having a battle between the bulls and the bears for what's going to happen here. And that trend line, that blue trend line, once again, to pull it back, is of utmost importance because it's a long-term trend line. And you always have to be conscious that when a long-term trend line is breached and confirmed, it can lead to big moves continuing in that direction. Doesn't always, but it could. Okay, so with the yield situation in mind, if we take a look now at gold, I've got a couple of different trend lines highlighted. First thing I'll do is I'm going to go to the weekly, pull back, and remind everybody watching, if you haven't watched my videos or if you've forgotten, my base case has been that this is a massive cup and handle pattern, and that it's only a matter of time before we resume out of that pattern. Typically, the way that a cup and handle pattern works is when you resume out of the handle, you usually have a move that is equivalent to about half of, or about the halfway point of the cup. So what I mean by that is if the recent bottom around 1675 is in fact the bottom, then before this pattern finishes, I'm looking at gold to be out somewhere, between, what is this, between the 2200 and the 2450 range when it finally resumes out and finishes its move. And that could be at the end of this year, it could be into next year and the year beyond. I think that it is going to be a multi-year bull market in precious metals overall. That's just my view. Free to disagree if you want. Let me go back out. And then I want to remind you again that I have these, if you look and follow my mouse down here, you see these ascending trend lines, which have been support and resistance at various points. Those are longer term, so I think they carry a little bit more weight. In fact, as we zoom in a little bit closer on our more recent price action, you will see that we have bounced off of one of those ascending trend lines right here, and we've also bounced off of them here, right? So if I go to a smaller time frame now, and then I zoom out, you can see all the price action along these trend lines. Let me pull this up here so that you guys can see. All right, so that's just to show you the ascending trend lines that go all the way back to the low from a couple years ago. All right, but now if we go to the daily time frame and we zoom in on my handle, a lot of people have been looking at this as a descending parallel channel. Okay, we've been looking at some really interesting price action the last couple of days, which has been coinciding with changes in yields. Right, yields kind of stopped out, like we said, around the 1.7 level, and have kind of receded since then. And so what we did was I had this this green box right here, which for me was the buy zone. We've touched it and then tested it again. I don't know if we're going to go back down. I had thought we would go back down, but price action seems to be suggesting otherwise. But this is an important moment, because if yields actually do resume back up, then I think gold will come back down. And first things first, to kind of analyze a couple of these different lines, you'll see here that I have these two brightened white descending trend lines, which have been, this bottom one has been better resistance and support, but you do see that this other one is also resistance. We did break above, but we dropped back below. I'm looking for a couple of things before I get involved with gold. I mean, I think it's a good idea to try to accumulate gold while it's down at this price, but if you're trading gold, if you're trading on futures, or if you're trading using GLD, or if you're trading using the miners even, then there are a couple of things that we need to make sure that we do. First of all, we need to get above this resistance at 1795. We've tried to get up there just in the last few sessions, and we were not able to get up there. We need to be able to break through and retest it and resume up. And then my final line in the sand is at 1916. I think that there's other resistance up here, but I think this is the most important in the long term. So that's one thing that needs to happen. Another thing is we need to get above this upper trend line, and we need to close above it. And so maybe we go like this and retest and then consolidate underneath this resistance and then come above it and then confirm and resume off and then go from there. That could also happen. Or if yields go up, then I think we might be stuck in this little channel, or we might come down below this support that we have here at 1746, and we may continue down. Those are some of the things I'm looking at. Like I said, I think the safest bet is if you're trading, is to wait for it to get above and confirm 1795, and then go from there. And because I think that until that happens, then we're not necessarily out of the woods on where gold is heading from here. Because what you don't want to do is enter the trade and then have it go way against you right here. You want to wait for something that is more solid. And as you can see, that line at 1795 was resistance and then support here. Provided a little bit of support here before breaking down, and then above support, and then was resistance and is now resistance. So I think that's much more important in the near term. And then obviously this is the big one. Once we get above that, then all bets are off, and we're just the upside is where the risk is. So that's kind of what's going on in gold. We're in a crucial point because we've got kind of this no man's land right here, where unless we get above or go below, it's hard to tell where gold is going in the near term. I think in the long term, we can count on precious metals continuing to be in a bull market. I just think that this takes a lot longer to develop on gold because of the nature of it, of the type of asset that it is. So that's how I will be playing it, and that's kind of where things are at. So thank you for watching. If this was beneficial for you, go ahead and like and subscribe and share. I hope you guys have a great day, and I'll see you guys next time.